I mean, Michael, from your perspective, you very much got your finger on the pulse. Like you said, you run a Coin Agenda, which is where you get speakers from all over the world and people that are really in touch with what's going on, not only in America but globally. What do you see as some of the big highlights that you think will happen in the next 12 months, in 2018?
Yes, and excuse me, a little bit of a frog in my throat. I think that to add what David said, one big thing in the supply and demand curve, and I, talked about this a lot when it happened last year, is the halving. So, as I explained earlier, there's 21 million Bitcoins that will ever exist, and they are created through the act of mining, which is essentially decentralized payment processing through people who just run a computer program. In the beginning, you had to highly incentivize them to use their computers for something that was incredibly experimental and might someday be worth money. And a year and a half later, there was only about 100 people using it, and they could use the technology to send an asset back and forth, but nobody really used it for anything in terms of purchases. The first actual purchase was the famous Bitcoin pizza, which was actually 2 pizzas, and it was not bought by the pizza place. It was bought from one miner to another when the miner in Florida said, hey, if we're supposed to be the future of money, how come we've been doing this for a year and a half and I still can't buy anything with it? And a gentleman in London said, what do you want to buy? He said, I'm hungry, I'd like a pizza. So the gentleman in London called up Papa John's in Jacksonville, Florida, and used his credit card to buy 2 pizzas for $25. And Laszlo, the programmer from the miner rather from Jacksonville, sent him 10,000 Bitcoins, because that was the price of Bitcoin back then on a sort of peer-to-peer basis before exchanges. You would basically go to a website called Bitcoin Talk, that still exists today, where people would talk about Bitcoin and where it was going. So for the first 4 years, 10 million of the 21 million Bitcoins that ever exist were created, and there wasn't a lot of demand. When the halving happened, and of course, it's experimental technology, nobody knew if it would go smoothly, you all of a sudden had the daily reward get cut in half. So instead of people who are mining getting a reward of 50 Bitcoins every 10 minutes, it went to 25. That meant that the increase of new Bitcoins into a system that had increasing interest and demand was cut in half. It took a couple of months for that to sort of be translated into the price going up, but when it did, it was a rocket ship. So there have been several what they call parabolic moves in the history of Bitcoin. One was right after the first halving. So the first halving was November of 2012, and the price of Bitcoin in January of 2013 was $13. By this time, at the end of 2013, it had passed 1,100. So that was a much bigger percentage-wise run-up than we had this year. This year may have been bigger in real dollars, and a lot of that was caused by the crypto economics of the first halving. The second halving happened in July of last year. I remember being on my balcony in San Juan, Puerto Rico, where I spent quite a bit of the year. I'm a Puerto Rico resident, and having a little glass of champagne to toast the halving. The price was about $600 back then, and everybody's like, a day after, 2 days after, why isn't the price going up? Well, because you have to go and sort of wait for it to get into the system and to reflect the demand, which goes up slowly, as opposed to the drop in supply, which is immediate. So all of a sudden, in July, the daily rewards went down from 25 Bitcoin to 12.5 Bitcoin every 10 minutes. And sure enough, it was $1,000 in January, and that was just the beginning. And we're now sitting at about $13,000 in December. And there's parabolic moves up and down based on supply and demand from the halvings. The next one will be in 2020, and then concurrently, it's been estimated that of most of those wallets that were referred to earlier are empty, inactive, have dust in them. Active Bitcoin wallets, people who actually have something in it and use them for transactions, it's about 4 million. So 4 million Bitcoin wallets versus all the people on Earth. This follows the curve of adoption of the internet, adoption of Facebook, adoption of other forms of social media. We should be looking at 400 or 500 million people using Bitcoin actively, whether it be a store of value or whether it's for payments. We can talk a little bit later about Bitcoin Cash and some of the payment technologies, because right now it's really more of a store of value like gold. But with 500 million people in there and a halving happening in 2020, you can sort of do the speculative math and see that it could easily be $100,000 in 4 years, which is why people in the space are excited, who've been around for a while. And when people say, oh, it's too bad I missed getting into Bitcoin, people were saying that when it was 200, and they've been looking at it since it was 10. So there was a presentation in New York City last week. I've been speaking and attending a lot of conferences all over the world. And it was called the Invest Conference that CoinDesk put on. It was the first one they put on, one-day conference. And they had Chris Berniski, who's a friend of mine who wrote a very good book that I'm in, and I'm in the liner notes as well, called Crypto Assets. And he explained sort of some of the fundamental dynamics, and he had modeled where we're at in Bitcoin on a curve compared to when adoption smooths out for other assets. And he went all the way back to, automobiles, when they were like a crazy new thing, to where now they're kind of mainstream and growing at a much slower rate, more stable rate, television, the internet, the web. And he used his, Stanford MBA training and all the time he's used as a cryptocurrency analyst to say we're basically 5% of the way to where it's a stable asset. So 5% of the way, and that was last week when it was 10,000. Basically, he's predicting about $200,000 per Bitcoin, to where it then becomes a much slower, less volatile raise. Don't know if that's 10 years, don't know if it's 20 years, but how many other assets can you basically go? And I can pretty much guarantee you that Facebook will not be 20 times the market cap, $500 billion now. It's not going to be 10 trillion anytime soon in our lifetimes.
Wow. Richard, from your perspective,
Scott, I don't know whether.
Yep. Sorry, David.
Yeah, I don't know whether my screen here can be seen. This is my Bitcoin pizza story, personally. Not as dramatic as that.
Hang on.
A cup of espresso with Bitcoin in 2014, and if you make the count.
David, I'm going to share my screen with you, so that we can see your screen.
I'm showing it. No. It wasn't on my screen. It was on my webcam. So you can just share my webcam with the attendees. Anyway, cutting to the point, this is an espresso that is now over $300. But that is, I think, perfectly fine. What I learn, and what each of us learn by being able to buy, use, hold, trade, and everything else with Bitcoin and other crypto tokens, is way more than not being looking back at the past and saying, oh, if I didn't have that espresso, now I would have $300 more. And that is a great way of, I think, measuring the value of knowledge, because then you can act on it, and you can then be in a position, oh my God, if only I did X, Y, or Z. No. You experienced it, you learned it, you acted on it, and you don't have to be sorry of not of having stayed passive.
So, what do you think, Richard? What are your ideas on next year?
So here's what's interesting to me. So I love everyone here, by the way, is so smart. It's so great to be in such a great group of people. And I do feel like I'm the neophyte here, but as a VC and an entrepreneur, I've always learned to follow the social signals when looking at business opportunities. And what I see as social signals, aside from all of the sort of market data about this becoming a very valuable and very real store of value, and the alignment with the network effects, is institutional money is about to come in. So the CME next week allows futures trading on Bitcoin and other crypto futures. We're seeing companies like CG Blockchain, who's a compliance service, get into blockchain. You know, the number of people I know from hedge funds, even pension funds, who've reached out to me, family offices, who want to learn about this asset class and who are really, really interested in getting in, tells me that this is 1997, right before the internet boom, and if you're going to use an analogy. But I think, as I said before, this one's going to be much bigger, because if you look at the parallels of how much the internet just changed publishing, maybe some networking and distributed computing, and maybe some workwear like Lotus, this innovation is going to change everything that has a transaction or an exchange of data or a trust factor to it. And so I think in 2018 you're going to see a maturing of the capital markets and treating this as an asset class that lives on a plane with other asset classes. I think you're going to see a shift from only utility tokens to a blend of utility tokens and security tokens. Security tokens are tokens that behave more like a stock share or an option or a warrant or even a derivative. And I think you're going to see the rise of protocols. So right now we have Ethereum, Bitcoin, Ripple, possibly Tether, and a few others. I think in the next year, you're going to see Hashgraph, EOS come out, and you're going to see 3 or 4 other new ones that we don't even know about, that 2 kids in a garage, one in Stanford and one in Kiev, are working on right now. And so those are the things that really excite me, is thinking of watching this technology mature from where it is, which is still really, really early. I mean, if we're using the analogy of the internet, Mark Andreessen hasn't left University of Illinois to go out to San Francisco and start Netscape, right? We're still using Mosaic, and we're all going, oh my God, this is a big deal. But as we move to broad consumer adoption, this is going to become an ecosystem that really changes fundamentally the way business is done, the way we look at sovereign boundaries, and the way we look at money and trust.